Good evening, trading world. It is January 9th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY for January 10th, 2022. The word of the last couple of days has been consolidation. The market is said to be doing either one or two things, either trending or consolidating. I like to use the analogy of a person running. No one starts off running a marathon. You have to build up your endurance by running smaller distances first. In this analogy, running is like endurance. Running is like the market trending. And the rest period between runs where you walk or double over and breathe deeply with your hands on your knees, this is like the market consolidating. So for this week, the question is, when are we able to start running again, and what is the likely direction of the next run? The win is easy. We've built up enough energy on the intermediate time frame, that's the 4-hour chart, to run a bit now. To figure the direction, let's look at some of the possible hurdles or upcoming events. This week we have a lot of economic data dropping, none more important than the Fed testifying before the Senate. You also have retail sales, CPI, blah, 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 whatever the rest of the stuff is. But the biggest event is the kickoff of earnings season, specifically the financials. Now, you would figure that with rising rates, this would be great for the financials. However, when all around conditions are iffy or bad, you will see what's called buy the rumor and sell the news. It's an old adage where prices move up in anticipation of a news event, but is deflated shortly after the actual event. So, as a whole, using the XLF as the financials, they're already at all-time highs right now. So the question is, how much more can they go? The XLF will be key to watch to see if the market can continue to run uphill. This leaves the market itself, and I'm using the S&P 500 as the market, stuck in the middle between a tug-a-war between financials and big tech. The financials, or XLF, is a $47.71 billion asset trying to drag the market up, while tech, on the other hand, is a $50 billion, $0.28 billion asset trying to drag the market down. Sounds like it's going to be much easier for the market to run downhill. Watch for the start of earnings season to see if financials can continue to hold the market up despite of tech. let's get to the key levels for tomorrow. All right, here we are with the key levels for tomorrow. Starting on the resistance side, we have the jack resistance at 466 through 467. Then we have the queen resistance 468 through 470. And then the king resistance 471 through 474. Now on the support side, we have the jack resistance at 465 through 464. Then the queen support at 462 through 460. And then the king support at 458 through 455. Now, with that being said and the levels pointed out, the battleground for tomorrow will be 465 to go lower and 468 to go higher. So understand that if we break 468, we're definitely going higher to the top of the range. And to the low side, 465. If we break 465, it's definitely a door to open for us to go lower. Definitely to at least the queen support. I don't see us going much lower than the queen support here tomorrow. Tomorrow I have a bullish bias for the market tomorrow. Now, by me saying a bullish bias, that only means that we have to close above 466.09 in order for us to be considered a bullish day tomorrow. Tomorrow's going to be a bit iffy because we're coming out of a consolidation mode and we're still pretty much in this consolidation mode. However, we have a bullish bias to the market tomorrow, and there's some things lining up to where we could actually have either a range day with a bullish variation to it, or quite possibly a late starting trend day up. Now, just to show you what I mean by that, we're already starting to have more of this consolidating motion. And at the open tomorrow, it's quite possible that we try to get above this 466, 467 area, but not quite ready yet. And we bounce back down towards support. Not only to bounce, but get more energy up to try to break through this 466, 467 area. And when I explained that we could have a range day with a bullish variation to it, all I mean is that on a usual range day, the whole principle of a range day is that we establish a high and then establish a low, and we pretty much chop back and forth between those for majority of the day. But there are also ways that we have this range day, but it has a bullish bias to it, and that just means that we push the boundaries on on the top side, instead of establishing one concrete, excuse me, instead of establishing one concrete high for the day, we actually continue pushing that boundary and resetting it higher and higher throughout the day, but still coming back a little low, but having a higher low and pushing up a little higher each time we go. So that's one possible outcome, or what I'm seeing right now, probably the higher probable excuse me and forgive me, I'm still trying to get over this ailment or cold, whatever it is that seems to be nipping at my heels. But in referring back to this range day with the bullish variation, I just want to make it known as far as the variation, how it can just consistently push the boundary up higher and higher, giving us a range day, but also a bullish day at the close. Now, the next likely scenario is that after having some sideways action, is that we actually can blossom into a trend up day. And at the opening, we're likely to see, well, before the opening, we would have to muster up the strength to get some distance up to open gap up. And that would establish support at the 466.09. So at the opening bell, we would see an attempt to fade back toward the previous close, which is 466.09. But somewhere between where we start and 466.09, we're going to find support at some point. And if we find support at this 466.09, we fade back and find support somewhere before we get back to 466.09. It's possible we chop here for a while before finally taking off. And if we take off, it's going to seem to most like a breakout, but I'm looking at a stop somewhere around this 471 area, where we would see some sideways actions before fading back going into the close. So that's the day map of how I see things playing out and what I'll be preparing for. And either way, at these decision areas, especially if it's a gap up and we hold support above this 466 and you begin to see a bullish divergence, the best bet is going to be playing what I would call bull call spreads. It's where you buy the low strike at 466, sell the high strike at 471. And that's going to be what I see one of the best ways to play for a bullish day. However, there's going to be another technique in which I may try for, because when everything kicks off with earnings season this week, I don't really see a very positive outcome. Financials are already bid up to a great degree, and it's like I said, in these conditions you look for buy the rumor, sell the news. So once financials start reporting, and if there's any kind of break or drop in financials to go along with the sell side activity that we've seen in tech, that could drag the S&P down a pretty good ways. And the other thing to think about is that all of last week, during every bit of sell side activity that we saw in the S&P, we still had pretty much what would be considered a positive advanced decline line. And that's basically the number of stocks bidding up versus the number of stocks that are bidding down. So with the sell side activity that we saw, with yet and still a positive advanced decline line, you should be thinking to yourself, what's going to happen when we get a day of sell side activity in which there's a negative advanced decline line? That could definitely act as a turbo boost for the little bit of selling activity that we've seen so far. So those are the things that I'll be looking for coming tomorrow and the rest of the week. As always, hoping you know and define your risk and profit will come, and wishing you a profitable trading day. Have a great one.